Well, joining us now in an exclusive interview from the Cantor Crypto and AI Energy Infrastructure Conference is Jason Les. He is CEO of Riot. Jason, welcome to the show.
Thank you for having me.
All right, so I am going to get your outlook on cryptocurrencies and some of the moves we've seen, and then we can get into AI infrastructure from there.
Sure.
So where do you see Bitcoin headed here?
So Bitcoin's always a volatile asset. I think 2025 has been a pretty transformative year for Bitcoin and the digital asset market more broadly. We've continued to see success from the ETF offerings that were introduced in 2024. We've seen major pieces of legislation passed. We've seen huge regulatory hurdles move to the side. I think the next thing the industry is looking for is the Clarity Act to be passed into law. That will provide a lot of rules of the road for the industry, and I think ease a lot of investors' concern how this industry is looked at, regulated, overseen. And I think what we're seeing is the volatility of Bitcoin reducing over time as it's more adopted, as it becomes a more long-term hold in different investors' portfolios. So I think the long-term outlook has never been more positive, but it's always with Bitcoin, with cryptocurrencies, it is a volatile ride up and to the right.
Yeah, and even as we have this conversation, we're seeing the entire Bitcoin mining industry essentially pivot towards high-performance computing, AI data center build-out and transformation. You've talked about that. It's been a big year in terms of that shift for Riot. When should we expect to see you disclose some of these new contracts and new clients?
So Riot is in a tremendous position with the assets that we have today. We have 1.7 gigawatts of power in service, fully approved at 2 sites that's in operation near major markets in Texas. This presents an incredible opportunity for Riot to meet the tremendous demand from hyperscalers, from enterprise customers, from neoclouds looking for more data center capacity. So we have been aggressively building out our capabilities and advancing on our data center the data center division here at Riot. We have completed a base of design. We are engaging with customers on a technical level right now, and we have most recently announced the development of the first 2 buildings at our data center campus in Corsicana, Texas. So we are moving very aggressively. We feel very confident about our ability to deliver. We're getting a lot of feedback in the market, and the next step for us as we advance on design, development, and engineering is to have commercial discussions with the end goal of landing a lease for this data center capacity with a high-quality tenant, whether it be a hyperscaler, enterprise customer, or neocloud.
Jason, on that, as demand eventually fluctuates in crypto, we've seen it happen before, how fungible is the infrastructure for workloads, switching it over to AI, to other things? And then how exposed do you think you are to the different estimates of how much overage some of these major customers might need? Maybe they need less based on how much they're building out in the future.
So recent research put out by Stephen Bird at Morgan Stanley, he has ongoing piece where he tracks the data center shortfall, the data center capacity shortfall through 2030. Every time he puts out this report, the shortfall increases. His current estimate went from a 45 gigawatt shortfall to a 49 gigawatt shortfall. The demand for capacity keeps growing. The supply of capacity keeps shrinking and not growing along that. We have a huge supply-demand imbalance here. That's why companies like Riot, with power approved in operation today, have an incredible advantage and in a great position to capitalize from this imbalance. So we think there's tremendous demand here for what we're building with data center capacity. As far as the conversion from Bitcoin mining to data centers, there are really 2 types of builds. What we are doing are building new buildings, full Tier 3 data centers on unused land that we have at our sites. We're starting off building, utilizing the power capacity that is available and unused today, and then eventually we'll be taking down the capacity that we use for Bitcoin mining as we advance on our data center development. So the conversion is not much of a story for us. The demand is incredible. We hear continuous positive feedback about our sites, and we feel very confident in the strategy we're executing on.